I'm going to show you the best concentrated liquidity pool tracking software out there. I have not found a better tracking software that has the accuracy that this software has, along with the fact that I have not found a software that shows as much data as this software has for me. Now, this is obviously Metrix Finance and has become a crucial part of my analysis. In full transparency, I'm the founder of Metrix Finance. I did not develop it. I am not a developer, but I did play a big role in actually building out this software. Now, Metrix Finance is mainly free. There's only a couple pro features on the tracking product right now, but I want to show you exactly how to use this and what metrics you should be paying attention to when it comes to your analysis. So I pulled up a random person's wallet address. They currently have $430,000 in liquidity pools, but they only have one Ethereum to USDC liquidity pool. This one on Uniswap on the Ethereum network. Now, this is most likely a DeFi fund, or maybe just somebody that has a ton of money that's wanting to play around with concentrated liquidity. But in their closed positions, you can see that they have a decent profit of about $82,000. On the open positions, they have about a $33,000 profit, and they're doing an APR of roughly 36%. Now, Metrix Finance will show you the current liquidity across the pools, whether you're in the open, the closed, or of course the all positions. It will also show you all the deposits, and had they withdrew some capital from this pool, it would also show you withdrawals right here. So let's just say they deployed $465,000 right here, which is what they deployed, but then they withdrew like $30,000. That $30,000 would show right here. And then taking a look over at the earnings section, you can see that they have roughly $67,000 of earnings across all these different positions. There's about 19.6K that they're waiting to claim. There's about 47.8K that they have already claimed. Now, keep in mind, guys, we are going to be diving into this person's strategy and talking about how they're making this type of income and how they're actually playing their position so that way they can make upwards near $115,000 in total profit just over the course of the past couple months since the beginning of this year. But also you can see their overall profit loss, which is about $33,000 in the open position. They have a $57,000 profit compared to somebody that were just holding the market. And funny enough, their assets are actually down $34,000. So that means that they have enough earnings to not only beat the Divergence loss, but they also have enough earnings to combat all of this asset depreciation right here. They're at a 7% overall profit when you look at this $33,000 across their $431,000 of liquidity. They're printing a 36% APR, which isn't super pretty, but at the same time, this strategy has been proven to work, and they're expected to make roughly $430 per day. That's $3,000 every week and roughly $13,000 every month. Now, of course, I want to go ahead and dive into this strategy, and if you guys do appreciate content like this, make sure to drop a like and subscribe, notifications turned on. As always, the Metrix Finance link will be down below this video if you want to check it out. With that being said, the first thing that I want to mention is the same metrics we just saw on the dashboard will be displayed up here. This person seems to only run one position at a time, but if they were running multiple positions at a time, it would aggregate all those different positions on the dashboard and show overall metrics. But let's pay attention to the asset compositions basically and what assets we have in this position. So obviously this is an Ethereum to USDC strategy. They started with 243,000 USDC and 67.97 Ethereum. That was worth $243,000 on the USDC front and $222,000 on the Ethereum front. They basically deployed roughly 50-50 of each asset. Now, if they were to hold those assets in the market, they would have a ratio of roughly 55% in USDC and 45% in Ethereum. Why is that the case? Well, that's because Ethereum has gone down. Remember, if they were to hold their initial assets, those assets would not change. But since they're in the liquidity pool, they actually have a lot less USDC and a lot more Ethereum. They have roughly 114,000 USDC, and then they have 109 Ethereum worth $317,000. That's a 75-25 ratio, basically, more weighted towards Ethereum. And that's because over time, since they started with 50-50 and the price has gone down, they have lost exposure to USDC because their USDC is being used to dollar cost average into Ethereum. We could say that, hey, maybe they thought there was going to be a big decline in the market, which is why they entered this position. Because I would say that this is a pretty broad range position. They had a max price of roughly $4,500 and a min price of $2,500. Now, when they opened the position, it was at roughly $3,300 per Ethereum. So they've essentially dollar cost averaged into Ethereum as the prices moved down, and that could have been part of their overall strategy. As we mentioned, they have about $67,000 of fees, and those have been about 50-50 when it comes to their position. Now, what I want to pay attention to is the divergence loss. This chart right here is the absolute gold for Metrix track. I have not seen any other software that actually has this and can actually showcase how your position performs against different metrics. So what this shows me right here is if this person were to hodl in the market, right, they were to hold their initial 243K USDC and 67.97 Ethereum, they would have $441,000 right now, right? Compared to what we have in the LP position, which is $431,000, that's nearly a $10,000 difference. But since we have the $67,000 in earnings, that comes out to a net profit of $57,000 compared to holding in the market. Now, if we were to run that same metric, but instead of holding their initial assets, they were essentially holding the dollar amount that they deployed in a 50 50-50 ratio where they started with about 50% USDC and 50% Ethereum, they'd have $439,000. That's a $7,600 divergence loss number right there, but profit against that divergence loss metric right there is $59,000. So they're outperforming this one as well compared to holding all of their money in Ethereum. So this tells us, hey, if they were to stick all of their money in Ethereum at the very beginning as opposed to just getting in an LP position, well, the LP position would actually have 18,000 more, but on top of that, since they have all the fees, they're at an $86,000 profit compared to that metric. And then of course, last but not least, they're at a profit on this one as well. Compared to if they were just hold all their money in USDC, it would be 465,000 USDC that they would have today. And the divergence loss compared to that metric is the highest. It's $34,000 because the price has gone down, but they are still beating that metric because they have this $67,000 in earnings, which is $33,000 profit against that metric. That is really, really good. And we can even analyze this position and see at some points in time, this position would have been as high as, if they were to just hold all their money in Ethereum, $577,000. But the liquidity that they had in that position, $503,000 at that time. So that divergence loss would have been pretty huge at that time because that was just slightly after they entered. So what we could say is they are really betting on the fact that the price is going to stay around where the current price is at, roughly $3,000. And the reason why is because up here, whenever the price skyrocketed all the way up and they only had $503,000, that's a lot of divergence loss right there. Those fees would not have outweighed that divergence loss. So we could say that they were betting on the fact that the price was going to come back down to $3,000 to the point where they would have about their initial assets back in the liquidity pool. But the good thing about this strategy is as long as the price chops up, chops down, chops up, chops down, and is in range, they are continuously earning fees, which ultimately, whenever the price does start to go up and they do start to incur a lot of divergence loss, they would have built up all these different fees, the $67,000 in earnings that they can use to outweigh their overall profit loss, basically, or their divergence loss. Now, diving into the history of the transactions, you can see they've only made 3 different actions here. Number one is the initial deposit of $432,000. That's about what they have right now, basically. Number 2 is going to be the $47,000 in fees that they collected. And then number 3 is going to be deploying $33,000 in fees. Now, if we dive into these transactions, you can see they actually deploy this $33,000 at the same time they collected this $47K. They're basically compounding about 75% or 70% of their overall earnings. And that's their strategy. The rest they're taking as profit. Maybe they're living off of it. Maybe they're trying to build a passive income stream that they could retire off of. Who knows? Maybe they're just investing at the end of the day. These are all different things that I wanted to mention though, because their overall strategy is to compound a portion of their earnings, take profit on a portion, but at the same exact time have a broader range and just let it print yield. Now guys, currently Metrix Track supports Uniswap v3, QuickSwap, PancakeSwap, SushiSwap, and that's it. And as far as networks go, it supports every network except Avalanche and Binance Smart Chain, which will be coming relatively soon. I need your guys' help to let us know what you want to see on Metrix Track next, right? Do you want to see tracking for Aerodrome and Velodrome positions? Or maybe tracking for Solana decentralized exchanges? If you want to see historical position data so you can see fees collected each day, or maybe position grouping where you can group multiple Ethereum and USDC positions together so you can see overall performance of those. I'm going to leave this poll linked down below in the description. Make sure to go vote on it, and while you're at it, you might as well go ahead and follow Metrix Finance on Twitter. Once again, I hope you guys enjoyed today's video, and if you did, drop a like, subscribe, notifications turned on. Let us know what you guys want to see on Metrix Track next down below in the comment section. Also, let me know what video you guys want to see next, and I'll talk to you guys later. Peace out.